because they decreased the price of volatility on Friday, people were still able to buy relatively cheap volatility into that session. And because of that, the dealers had no hedge. So if the dealers haven't got any hedge, the only way the dealer can protect themselves now is to ramp up the price of volatility, but they're going to have to really ramp it up to stop people getting involved. Nobody's closing out the volatility because it's still cheap. And obviously, because of that, the only way the dealer can hedge at that stage is actually to sell stock, which is why it got slippy yesterday. So when the stock started to sell and we started to run some stops and we started to run some big wholesale price levels, even the S&P futures, we went in the 50s, we went the 25s, we went the zeros, and we went to the 75s. And eventually the 75s, you started to see at the 75s, guess what happened? The price stopped. Why did it happen? Because the volume in the puts calls ratio massively increased, and we started to see it reversing out. The trade was in. We already showed you that yesterday, in fact, in Classroom. We showed you the idea that the puts calls had peaked out and had started to come out. So in other words, people have closed off their positions for a nice profit and are now buying cheap stocks at bottom edges. And you can just see them buying the cheap stocks. You can actually physically see them buying the cheap stocks. It's a perfect example of a perfect structure. Hold on a second.
Happy Tuesday, guys. Really had to grab a call real quick. And this was so evident yesterday. I was thinking about that from the message that Ray had posted Friday. And then we saw it yesterday, and it did get slippy.
So you can see at the bottom edge what happened. It was almost the perfect structural bottom edge, wasn't it? This has almost got Theo written all over it, this buy trade on the pullback. We'd already reversed the bracket. We'd already set up a brand new structure. You can see that we got a high print price against a low print price there. You see it was almost the perfect halfback trade into that first level. You saw the spring trade coming off that reversal narrative right there. And then it kicks off big style. And where did the price go to? Look at where the price went to the tick, guys. Look at that, to the tick. You see it? Do you see how beautiful that structure became? And it's not something that you see in hindsight. It's something you see actually developing on the right-hand edge, because every single time we have a new high or a new low, we start to put in another level, another idea, another structural narrative. And you can start to see these structural narratives evolving in real time. And obviously, if you don't like buying lows, but you love buying springs, there's your spring trade right there. You start saying, there's the spring trade, there's the spring trade, that's the one I want to be on, that's the deal for me. And you start buying into the spring. You start buying into the spring trade in those locations. You start looking at some of your values to see whether there's any value coming on the buy side of the book. You see a wee bit of value in ABCs, but not a lot. You start asking, well, what else have we got? Have we got any volatility divergences creeping in? Are they starting to unwind some volatility hedging? Not really. So you're starting to say, well, this is not as good a trade as I thought, but are we seeing anything else? What about some reversals? Not really. But at the time of the trade there was, but they pressed it here and they took that trade back off the lows. So it was a tough trade. I'm not saying it wasn't, but there is other elements to this. It's never going to be an all-in maximum, but structurally, this is a very, very powerful trade. Structurally, this has got greatness written all over it. But it just didn't have the values to allow you to explode into this as a massive buyer. That's probably why it took a while to come off the bottom edge. It took about an hour to come off that little pullback trade before we got the flash up to the top edge. But where did it stick? 68, 69 print. the price we traded at last night when the slippiness came in. To the tick, literally to the tick. And you can see what happened from that point onwards. We finally broke it in London here, right on the back of 9 o'clock. And you can see we got a good rally off of that, but it's failed to evolve. And again, from a structural perspective, we've got an overnight low here. You can see where the overnight high was. It was our bracket measure that we had here. And you can see where the target price was for that phase. And again, a very, very nice level to start thinking about and leaning against and doing various bits and pieces up here. Nice trade, nice outcome, fantastic. And that's all you need to see. That's all you need to work on, guys, is get your process right as part of your trade setup. It's part of the reverse engineering process that we always like to lean against. And obviously from that, great trades can be seen, and then you can start looking for the execution. The value is not great, but when the value turns, you say, right, I've got to be in this because this is a great structural setup. And then you take a great structural setup and you make a lot of monies.